All right, what's good, everyone? Hope you're all doing well. Here again for our next YouTube video regarding ranges. This is lesson 10 of the overall series that I'm making regarding education. And within ranges, ICT splits it up into three different topics. One of which is dealing ranges, the other which is candle ranges, and both of these are split up into premium and discount. Now, when it comes to dealing ranges, we don't necessarily incorporate time, and I don't want to say they can be drawn from any point, but it's similar to the AMD and Power 3 scenario where AMD is pattern based and Power 3 is time based. Dealing ranges are pattern based, candle ranges are time based. And personally, for the most accurate results, I prioritize candle ranges. Lower time frame dealing ranges are often used for entries, whereas candle ranges are more used for looking for higher time frame reversals and or lower time frame continuations. So you've likely heard the phrase never long in premium and never short in discount. That is, the basics of ICT. So this video, like I talked about, is going to cover how to properly identify dealing ranges as well as understanding candle ranges, previous candles and current candles. Now, when I say candles, as you guys understand from watching my previous videos, you know that candles refer to power threes. Power threes are the open high low close and open low high close of a candle, whereas classic AMD is simply a pattern. Power 3 is time based. And I'm going to show how I utilize them in my own trading. So the first portion of this video, the first half, is going to be covering the fundamentals of premium and discount, slash like the basics of premium and discount, and how to identify valid dealing ranges. And then the second half is going to be covering how to utilize candles as ranges. Candles slash power threes as ranges, how to incorporate time into that. And yeah, so the market, we have to understand first that the market only does so many things. Four things, which is hunt liquidity, to rebalance equilibrium, and to rebalance inefficiencies, as well as generating liquidity. Now, these are both split up between buy side and sell side, and the basics of it is whenever price moves lower, we are delivering sell side. When we only deliver sell side, that is a unbalanced range. A balanced out range is when price delivers both buy side and sell side together in a single range. That is what makes a BPR. So when you are trading BPRs, a fair value gap and inversion fair value gap, as you guys understand, a bullish fair value gap is when we are, of course, delivering buy side, and a bearish fair value gap is when we are delivering sell side. That is what makes a BPR. So when price delivers on a higher time frame into ranges, both sell side and buy side, that is what makes a range balanced out. So here we can see that, and this is a little clip from one of ICT's older lessons from 2019. We can see that in terms of pattern, in terms of AMD, we have our classic accumulation followed by manipulation followed by distribution. Our job as traders is to catch the distribution. That's simply the highest probability setups. That's when the highest probability setups are going to occur. Those are the type of market conditions that you want to be a part of. ICT says this over and over again, that your job as a trader is to trade the most high probability conditions. You, just think logically, would you rather be a part of this accumulation right here, this price action within here, would you rather be a part of the manipulation right here, very short move, or would you rather be a part of this, the distribution? And it's very obvious. We would much rather be a part of the distribution. That is when our cleanest setups occur. That is when our cleanest sell days and buy days happen. It's just the type of price action that you want to be a part of. So our job as traders is to play a continuation of that, because you're not always going to be able to catch the high or the low. And we don't really need to ever. Your job is to wait for confirmation and to wait for price to be clear. You don't need to catch the high, the perfect high, the reversal, or the low. Your job is just to play continuation of the dead clear setup, and that is how you make money in the market. So in order for ICT traders to keep pinpoint precision, like I just talked about, we have to know the highest probability places in which to buy and sell. We want to buy in a discount and we want to sell in a premium. Like I said, we don't have to time the top or bottom, but we sure can capture a bulk of the move by simply following the trend. If we want to long, we must buy it at a discount. If we want to short, we must sell at a premium. Equilibrium is the state at which opposing forces buy side and sell side, are at a balance with one another. Our job is to determine the narrative for price, directions, and targets. So here, price is ultimately bearish. In order to validate continuation after that, we must have a clear external drawn liquidity, being this level of sell side right here. So our time from institutional order flow is bearish. We have a clear external drawn liquidity. So ultimately, our job is to play continuation of that. And then determine where we can add our positions, adding our positions within premium, looking to sell at a discount or at our external drawn liquidity. So how are we going to draw out equilibrium? So this is, very, very basic, but I have to go over it. Personally, I use the Gambox tool on TradingView where I draw out equilibrium. As you can see right here, this is my range, which we're going to cover next. But I use the Gambox tool within TradingView. You can find that underneath the Fibonacci. You can use Gambox down here. Now, you can either use Gambox or the Fib retracement. I personally just use Gambox. There's really no difference because you can adjust the settings the exact same. But personally, I just use Gambox, and that's my personal. And these are my settings right here. I like to keep it simple, no background, no extra numbers, just the high, the low, and equilibrium. Actually, there are extra numbers, which I'm going to cover with candle ranges, but for now, we're just going to focus on the basics, premium, and the discount. So below the example that I'm showing here, we can see that we have yet to have within this distribution right here, and this is pretty much the exact same scenario as what we show up here with ICT's example. We have a classic accumulation, manipulation, distribution. Our job as traders is to catch the highest probability conditions. Classic accumulation, manipulation, distribution. Again, we don't have to perfectly catch the height of the distribution or even the initial first stage distribution. Our job is to play continuation. Now, we only play continuation when there is a clear external drawn liquidity lower. In this case, lower being EQ of the higher time frame range. Now let me go down the time frame so I can show that we did not hit it yet at the time where we retraced, as you can see right here. So we had a very clear external drawn liquidity lower being EQ of our overall dealing range that price is currently trading within. When price reversed back in October 2022, now when price put in a new all-time high during December 2024. And why would we be looking for a retracement back into discount of this range? Well, simple, because we have yet to do that so far. So when we zoom out a bit before anything else, we can see that each retracement that price has had, of course, aside from, down here, each significant retracement we have yet to see price seek out equilibrium. This retracement back here during, November, October, September, August 2023, we did not seek out equilibrium. Likewise, back here, likewise during August 2024, during that massive sell-off, we did not run out equilibrium. So it was bound to happen at some point in time, and that time was here, because at this point, that is our only clear draw on liquidity. So with a clear draw on liquidity lower, clear bearish higher time frame narrative, because as we can see in this example, we're not just fading higher time frame order flow. This classic AMD pattern plays continuation of our higher time frame order flow, as we can see right here. So we have classic accumulation, which again, we don't want to be a part of that. Classic manipulation, again, that is not going towards our external drawn liquidity, and that is not respecting our time frame order flow. We're not looking to long within here. We're not looking to do long or short within here. We're looking to short that is in line with the higher time frame order flow down to our external drawn liquidity. So our job for the highest probability setups is going to be playing continuation of the distribution. And something I didn't mention, which is heavily implied, is that this is a fractal concept. This isn't just a 4-hour time frame concept. This can be applied to all time frames, the 1 minute, the 15 minute, the 5 minute, 1 hour, and so on and so on. So don't get that confused, obviously, because of course you're not going to be waiting, however many days. You're not going to be waiting 67 days, or not 67 days. You're not going to be waiting however many days this was. You're not going to be sitting down for 2 weeks straight. No, not at all. That's not what I'm saying. I'm saying you want to be trading the highest probability conditions, because of course there's going to be setups on the lower time frame, but I'm more referencing this as a fractal model. If you're going to be a swing trader, you want to wait for the distribution to start. If you're an intraday trader, then again, you want to wait for the distribution to start, but this will be more on the 15-minute, the 5-minute, and the 1-minute, not just the 4-hour daily and so on. But from there, we have to understand, well, as we can see right here, when price seeks out equilibrium, we want to understand what is going to cause price to reverse once we are within premium. And you might want to know, where is price perfectly going to reverse? Truth is, we aren't always going to know. Our job is to react based off of what the market gives us, based off, our reaction off of certain PD rays, certain cracks and collations that form within premium, and so on. So in this example, we can identify, different PD rays in premium that all align together, which could lead to a likely reversal. So when we do our little top-down analysis on the weekly time frame, we have a weekly up close candle, which can act as a order block. As we know, I think it was December 2022 ICT series. It might be private, but he talks about algorithmic order flow, institutional order flow. He classifies that as when up close candles get respected. In bearish order flow, bearish institutional order flow, you're going to see up close candles be respected. In bullish institutional order flow, you're going to see down close candles be respected. So with bearish institutional order flow right now, we want to see up close candles like this be respected. And that's one PD right there. So weekly order block right there. Daily time frame, what do we see within premium? Well, the first premium array on the daily time frame is, this daily CB, as we can see right there. So we have a daily CB, weekly order block, all aligning pretty close together. Well, now what do we see on the lower time frame? Well, something I did mark out was, it's not just PD rays, but it can also be NUWOGs and NUDOGs that act as PD rays. So we have the daily CB, this NUWOG. Additionally, we have a NUDOG. So right here, between Wednesday and Thursday, open right here. So NUDOG there, NUWOG, daily CB, weekly order block, all aligning together. Additionally, like I just talked about with the algorithmic institutional order flow, we also have these up close candles aligning at the same place on the 4-hour, which all can act as a likely place to reverse. And let's see how price reacts. Well, we perfectly tap it and we reverse. Weekly order block mitigated. The NUWOG and NUDOG from those previous weeks gets tapped into. 4-hour order blocks get taps into. Daily CB gets mitigated. All those aligned together led to a likely reversal, which then can validate continuation lower on a lower time frame, as we can see here. So that is the type of stuff that you're looking at within premium in order to play continuation. And that's everything I list right here, and so on. So this is an example on the lower time frame based off a lesson I taught the other week regarding protected highs and lows, and simply the utilization. The point is that many times the market is going to present fake setups within discount of the range to hunt the stops of traders who are looking to get in early. It's traders who are looking to get in early at discount because they see, their mechanical model present itself. But because we're not within premium, we've yet to reach premium, price is unlikely to reverse. So we form fake setups to engineer liquidity, like we talked about earlier with what the market does. We hunt liquidity as well as generate liquidity. That is why price sets up, fake setups within discount of ranges when price is bearish. That is simply to generate liquidity. And simply by waiting for premium to be hit, you're going to mitigate many losses instead of just trying to pattern trade your mechanical model. So anyways, here you can see that price forms a fake setup within discount. It's fake because we're in discount, and by just waiting for premium to be tapped into, you mitigate any losses. Same example here, price taps into premium of that range, and then we form a valid sell model, and that's when price starts to distribute. So that is a lower time frame utilization. Obviously I did not draw out EQ here, but if you reference if you reference where this is drawn from, if you were to draw that, put it down to this low, your EQ would be generally around here. And then of course we tap that, and then we form a valid setup. So that is the utilization of the lower time frame. So 15-minute AMD, accumulation, manipulation, SMT, distribution. Highest probability setup is going to be playing continuation of that distribution. And that is what we have drawn here. High, low, equilibrium, and then price plays continuation of that. So that is the lower time frame reference. So now you guys understand how to identify dealing ranges and how to draw out premium and discount. Basic stuff, but it's important to cover. But ranges are not just drawing any single random high or low and expecting price to one trade the EQ of it. No, you have to incorporate time for the most accurate results. And this is why we say candles are ranges. Now, candles aren't just candles. Candles are power threes. Candles are the open high low close, or my bad, power threes are the open high low close and open low high close of a candle. They are significant. So whatever power three I am trading, so we're going to use a reference from last week with the weekly power three. So whatever power three I'm trading, such as the weekly power three, I use the previous weekly power three as my dealing range. If we are below, so whenever price is within discount, we're looking to short. So if we are below EQ of the previous week's range, as we can see here, we look to long below discount, or more like we look for setups to occur when we price taps into discount. Because of course, situations like these where we perfectly reverse off EQ, you're not really going to be able to catch that. But what you can do is trade based off the reaction of that, which we're going to cover next. So for below EQ, I see this as discount. If we're above it, I see this as premium. So premium of the previous week's range is of course premium, and below that is discount. So if we are below it and I see a bullish lower time from SMT, such as previous low SMT, as we see here, when price taps into discount, we're then going to look for longs because it gets printed with a lower time frame crack calculation. So from there, we're going to look to long up to the external draw on liquidity. So at this time last week, as I posted on Twitter, in my index analysis, we can see that going into last week, which is right before I posted this, we were currently within a higher time frame market maker buy model, a 4-hour market maker buy model. And as we know, within market maker models, price is always drawn towards the original consolidation high or the low in a bearish example. So this one being a bullish example, our ultimate draw liquidity is 2,500 at the original consolidation high, which at this point, when we fast forward a bit, going back here, price taps into discount. Back here, when price taps into discount, we can see that again, our clear draw liquidity is up over here. The original consolidation high. So we have a clear external draw liquidity, bullish higher time frame order flow, as we can see here. From there, we're looking to play continuation of that. But since there's so many possible ranges to draw from, this is why we incorporate time. It's like, if you don't incorporate time, how do you know what range you're going to draw from? Well, you see this range or you see that range. It's like, how do you know when to draw from? By incorporating time. That is what makes these so powerful. But as you can see here, after we tap EQ of the previous week's range, right here, as we can see, ES and Q run it out while YM puts in a failure swing from the SMT to pre-sale low. And then, of course, like I just list here, externally drawn to the market maker buy model high, the original consolidation high, and so on. But from there, by utilizing the proper time frame alignment, after price forms SMT with the pre-sale low while tapping into discount of the previous week's range, we then would focus on the 1-hour time frame, which I'll more than likely do a video on time frame alignment in the future. Not right now, but in the future, I will do a video on that and cover time frame alignment. But for now, you'll learn a little bit here and there from these videos. Anyways, pre-sale SMT, proper time frame alignment is a 1 hour. As you can see in the 1 hour, we have a 1 hour CISD, a 1 hour for value gap. And from there, we can look to long off of that. Why? Because our range below is balanced out. We already tapped discount of it. We already formed our Kraken correlation at discount. And from there, we can validate higher prices. Price taps into it. From there, again, you can utilize the proper time frame alignment, then drop down to a 5-minute and find a 5-minute entry. Or if you're just a swing trader and turn off the higher time frame, you can take a trade similar to this. Of course, your stop loss will more than likely be based off of the 5-minute chart, but of course, just for the sake of not so much hindsight and truly protecting your stop loss, you can do something like this. But of course, this is what the trade will look like. Trade ended up hitting the following week, which is the week that we're currently on right now. And this is an example of how you utilize candles as ranges. So again, this isn't just previous week. Whenever we go into a new power 3, we always want to reference our previous power 3. So I'm going to reference something from that just happened today. So it's not just EQ that we can use as reference for ranges. It can also be something. It can also be when we swing grade our ranges. So we go right before this new daily open. We can see that it's not just EQ the range in which we can see reversals. When we utilize candles as ranges, we can also look at the quarters of it. So it's not just EQ the range, it's also our quarters, our 25% mark, our 75% mark. And as we'd see right here, if I actually show my other charts for SMT, we can understand that here. Let me turn this off and just show on this chart. Okay, so as we can see here, all three indices, well, we're just going to focus on NQ. NQ taps the 25% mark of the previous day's range. Now, so just consider these as significant levels. When price taps, 25% mark, 50% mark, 75% mark, just treat those as significant points of reversal. As we can see here on the lower time frame, when price does tap the 25% mark of it, we can see that on the lower time frame right here. And in fact, let me just draw out it on the actual chart so we can, it's easier to see. As we can see here, when price taps the low, taps the 25% mark, we can see that we form SMT. Now, right here, and of course YM, put it in a fairly swing. A lot of you guys see YM having price action like this and thinking that the market is rigged, thinking that YM is useless. No, YM is so important, is so impactful, so that we can identify cracks and correlations like this, because many of you guys would be looking for EQ of the range, and not looking at YM because of its poor price action. But what you would miss out on is the fact that when price taps 25% of the pre-stage range, what we then do is form SMT of that range, as we can see right here. And then from there, we have a reversal, 15-minute CISD, and then from there, price pumped up the rest of the day, up to our actual drawn liquidity. Because there is no time-based drawn liquidity above, we then, again, reference what the things that market does to rebalance to inefficiencies. What is inefficiency? Inefficiency is a imbalance, so a value gap. And as you can see on the weekly time frame, we had a unmitigated inefficiency, unmitigated value gap, weekly CBU up here, and that is where price is drawn to today. So that is just showing how you can utilize these concepts in the fractal sense and how to swing grade your range. Now, in summary of candle ranges, we can swing grade them 25%, 50%, 75%, and just understand that these are significant levels in which price can reverse. When price taps these levels, we're then looking for a lower time frame Kraken correlation, and that lower time frame Kraken correlation is what is going to dictate continuation or a reversal. In this example, it is a lower time frame reversal into higher time frame continuation. why, or like how do we know the price is not going to seek out EQ of the range? Simply because of the lower time frame cracking correlation that forms at the 25% mark. So that is how you do it. Again, fractal concept, go into a new day, you're referencing your previous daily power 3, new week, previous weekly power 3, new 4-hour power 3, referencing your previous 4 power 3, new month, referencing your previous monthly power 3, and so on and so on. All right, if you guys have any questions regarding anything I talked about here today, please let me know. You guys are going to find the Notion document in the description of this video, as alongside my socials, my Discord where I live trade, and so on. If you guys have any questions, leave those either in the comments or join the Discord, asking there. But of course, either work, I'll answer regardless. These videos are going to continue to be more and more consistent. Again, I want to post at least one educational video a week. It does get a bit hard at times to, post, make a quality script like this. Of course, these notions are not as easy as they seem. Of course, it takes a few hours, but it can, again, it's a bit difficult because, again, I want to make sure that the quality of the info, the quality of the education in here is, top tier, and I don't just want to put any sort of info in there. I want to make sure you guys are getting the best stuff, at least from the stuff that I know, the best sources and all that. But of course, I'm going to continue to be more and more consistent with these every single week, and in between those, I want to keep doing trade recaps, at least regarding the trades I do take in the live trading calls, both wins and losses. I'm going to try to be more consistent, probably just recap every single trade that I take live, and then of course leave my personal trades, just keep that for my live trading and mentorship group. But all trades taken live, I'm going to start recapping that on YouTube, just because more education for you guys and so on. But if you have any suggestions for future videos, again, leave those in the comments below. Otherwise, enjoy this video, enjoy the rest of this week, and we'll aim for a new video early next week as well. So you guys have a great rest of your week.